America's cryptocurrency battle is still nowhere close to being over. Coinbase has just reported revenue and earnings showing that higher Bitcoin prices do not necessarily correlate with higher trading revenues for the company. Meanwhile, they've also just sued the SEC once more, asking them to dismiss the case of their lawsuit against their staking and transaction programs. Coinbase's shocking earnings report comes in the context of an overall crypto market that hasn't really moved much since the start of the second quarter. Volatility has indeed collapsed, and although prices for Bitcoin are still much higher than they were at the start of this year, investors and traders are wondering what exactly is held in the future for Bitcoin's price and Coinbase stock, especially given the macroeconomic headwinds of falling inflation as well as a loosening labor market. Well, folks, in this video I'm going to show you exactly why it might pay to be more optimistic than bearish when it comes to the cryptocurrency markets, particularly with Coinbase. In this video, we're going to break down Coinbase's latest earnings report, look at their projections for the next quarter, and try to break down exactly why their subscription revenues skyrocketed as compared to the transaction revenues going into what is expected to be the biggest year for crypto since 2020. And well, what better way to start things off, folks, by first diving right into Coinbase's shareholder letter as well as their analyst estimates for the second quarter. As I'm sure you've already read, if you follow Coinbase stock closely, they essentially beat both top line and bottom line estimates, with EPS coming adjusted at around 20% better than what analysts had expected, with the same thing for revenue at over $700 million. In the context of regulatory scrutiny and so much pessimism on social media and general Wall Street sentiment around crypto, this is a pretty impressive result. Although on a year-over-year basis, it's no surprise that Coinbase's net revenue is down more than 50% from the second quarter of last year, given the decline we've seen in broader crypto markets. What was much more of a surprise is a 12% decrease in revenue on a quarter-to-quarter basis, meaning from the first quarter of this year to the second quarter, Coinbase's net revenue fell, even though Bitcoin's price skyrocketed by more than 45%. What this right here sheds light on is the fact that Coinbase's revenue is much more diversified than initially thought, and it depends much more on volatility than actual price. And this is a key differentiator that this company has over its competitors. Because you see, folks, right now we are in an economic tightening phase in the overall economy. Meaning, although stocks are up this year alongside crypto, we are still nowhere near the frenzy we saw in 2020 and 2021. We simply don't have the right ingredients for that kind of frenzy to happen, where you have liquidity everywhere and an insane amount of hype around different altcoins and stablecoins. Yet, we are still seeing quite a lot of strength and recovery in the likes of Coinbase's revenue and Bitcoin's price action. This bodes very well for what is yet to come in the halving of 2024, which has historically been always one of the best years for crypto returns, with the pre-election year, which is right now, also typically quite strong throughout the end of the year. From an investment standpoint, this means that although Coinbase is not going to give you one-to-one returns for what Bitcoin does, it will give you a good exposure to not only the volatility, but as it turns out, also the infrastructure side of things with subscription and services revenue. Because, folks, for the very first time, Coinbase's revenue split is leaning towards subscriptions over transactions. Transactions depend mostly on volatility, and volatility has collapsed because of the lack of real movement in Bitcoin over the past 4 months. But the revenue stream that the company has been working aggressively towards throughout 2022 and has also been a key part of my investment thesis is clearly starting to play out with their $335 million stream just in the second quarter. The reason why this is important is because most of this revenue is coming from not only subscription for services, whether that be Coinbase Pro or different institutional activities, but also staking and its USDC partnership with Circle. Although staking is a single-digit percentage of Coinbase's total revenue, it is also a very important one because it is essentially the number one way we can speed up adoption of something like the Lightning Network, as well as investments in crypto. Just like a bank needs cash to lend out money, you need people to stake to really get the ball rolling for the overall industry. And if right now, when volatility is so low, we are seeing staking increasing revenue as interest rates go up, then just imagine what will happen next year if we see some sort of bull market in Bitcoin materialize. And as you can see, at least for the third quarter, Coinbase does expect some improvements in this revenue, but generally keeping their outlook very conservative because of the uncertainty around what's going to happen with the Fed as well as the economic recession. However, folks, despite these fundamental improvements, many analysts on Wall Street are still dismissing Coinbase stock as something that is extremely overvalued and detached from its fundamentals. Well, folks, although this doesn't sound very good on its surface, this could just be the perfect recipe for returns in the next couple of years. Because as we all know, folks, when analysts are bearish, that's when value tends to come about. And it's at the end of the day analysts that derive frenzies in markets when they bid up their analyst ratings when stocks tend to rally. And likely that is yet to come for something like Coinbase. Goldman Sachs actually has a sell rating on Coinbase with a price target of $51, with the likes of Bank of America, JP Morgan, and Barclays all having expressive caution around the growth prospects of Coinbase, with their primary argument being that we struggle to see a favorable valuation argument for the stock given that the company's revenue is tethered to an asset class that has yet to show a sustainable everyday utility value. I don't really need to read any further into this because I can just see exactly what Wall Street is getting wrong, not only about Coinbase, but for basically every other growth story in the market today. And that's the fact that no growth story is ever obvious to Wall Street when the time is right to invest. Wall Street, just like most retail investors, are looking for a form of validation in the fundamental acceptance of Bitcoin and cryptocurrencies. Yet what they fail to realize is that Coinbase has already revealed more than $3 to $4 billion in revenue from this industry over the past 4 years, despite this sort of value not having yet been unlocked. What this means is that crypto is two products in one. Not only is it supposed to be this fundamental store of value, which it already is working towards through infrastructure improvements, but it is also supposed to be an asset class to gain exposure to volatility in interest rates as well as liquidity. Higher liquidity has historically always resulted in higher Bitcoin prices. And that is something that Coinbase's business is also taking advantage of, and as a matter of fact, turned a profit in 2021. Coinbase's operating margins have improved to almost negative 10% for the second quarter after having been at more than negative 100% in the depths of the bear market last year. Plus, not only has Coinbase's liquidity position improved with a current ratio of more than 2.0, but their free cash flow has actually materialized, resulting in a valuation of just north of 10 for each dollar of free cash flow. This means that compared to any other exchange or financial data company, whether it be Robinhood or Binance, Coinbase is actually trading at an extremely attractive price to free cash flow. Meanwhile, they haven't even yet turned a profit because of obvious headwinds in the crypto markets. This kind of revenue recovery, despite narrowing losses, is a pretty optimistic sign for Coinbase's business, despite what regulators have to say about the company's operations. As usual, folks, risks do still exist with this company and the crypto markets, but based on what I'm seeing from the earnings report as well as general sentiment, I believe that the next few years could be quite good for both Coinbase as a business as well as general cryptocurrencies. But as usual, folks, let me know your thoughts on this situation down in the comment section below. Thank you very much for watching, and I'll catch you guys in the next one. Take care.